Hello everyone. Today I'll be talking about two fundamental accounting methods used in businesses, cash accounting and accrual accounting, and highlight the key differences, advantages and disadvantages. Let's start with the basic. What is cash accounting? Cash accounting records revenues and expenses only when cash is actually received or paid. In other words, income is recognized only when the money hits your bank account and expenses are recorded. When you physically pay the bill, this method is straightforward and much easier to manage. Especially for small businesses, it's commonly used for cash flow tracking, making it simple and intuitive. On the other hand, what is accrual accounting? Accrual accounting recognizes revenues and expenses when they're earned or incurred, not only necessarily when the cash is received or paid. So even if the cash hasn't arrived yet, the revenue is still recorded. This gives more accurate and complete view of company's financial health, as it reflects the true timing of economic events. Now let's break down some key differences. Under the aspect of simplicity, cash accounting is easier, but when it comes to accuracy, especially in long-term financial performances, accurate accounting is the winner. Timing is another major factor. Cash accounting is based on actual transactions, while accrual accounting is based on when income is earned and expenses are incurred. As for usage, cash accounting is generally used by small businesses due to its simplicity. Accrual accounting, however, is required for medium and large companies under standards like GAAPs or IFRS. Now let's look at the advantages and disadvantages of both the systems. Cash accounting is easy to track, especially for business that rely heavily on cash flows. It helps in monitoring liquidity effectively. However, it may not provide a full picture of profitability because it doesn't account for outstanding invoices or bills. Accrual accounting, in contrast, offers better matching of income and expenses, which shows a more accurate financial picture and true profitability. But it's more complex and time consuming to maintain. A chart in the visual shows that 55% of businesses, especially large firms, prefer accrual accounting. This is because it aligns better with financial reporting standards and is more useful for making strategic decisions. Let's take a quick look at a net profit comparison between the two methods. In October, both systems might show similar profits, but in November, cash accounting shows a spike in profit, not because more was earned, but because that's when the cash came in. Meanwhile, accrual accounting spreads that profit more evenly based on when the services were actually provided. This highlights how cash accounting can give a lumpy or misleading view of profit timing. Now, let's briefly touch on the pros and the cons. So, cash accounting is often described as more natural. It's what we instinctively do in our personal finances. It's also not GAAP compliant, so it's not suitable for larger businesses. Also, reader of cash-based reports may not be fully understand what's really happening in the business. Accrual accounting, while GAAP compliant, does take more time and effort. It may not always reflect actual cash flow accurately, which can be a concern for businesses with tight liquidity. Additionally, for companies that charge customers upfront, accrual accounting might temporarily understate the revenues as it spreads them pe- over the period services are provided. Finally, in terms of usage, cash accounting focuses on cash in and cash out. It ignores account receivable and payable, which is fine for smaller operations. Accrual accounting focuses on economic reality, recognizing when services are incurred and goods are received. Even if the payment happens later, that's why it's standard for middle and large companies. To wrap up, cash accounting is simply a good for short-term cash flow visibility, but lacks detail. Accrual accounting is more complex but paints a complete and accurate financial picture, essentially for growing business. Thank you for listening. I hope this helped you understand the difference between these two accounting methods and how they can impact business decision making.